Good morning and welcome to Stock Market Today. It's Thursday, March 7th, 2019. I am your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. You can find me on Twitter. I'm at Dan Russo _CMT. And if you're over on StockTwits, I'm there as well under the same handle. That's at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show, daily stock ideas for you to consider hitting your inbox every market morning. And a special thank you to StockCharts.com, who hosts this show every day in the 9:15 slot. And a special thank you to all of you who tune in every day. So U.S. equities were lower in Wednesday's trading. Small caps continued their recent underperformance, falling by about 2%. Healthcare and energy lagged at the sector level. Materials and utilities were the only sectors to finish higher. Treasuries were stronger across the curve. The dollar was flat against the major crosses. Gold finished up 20 basis points, and WTI crude settled down 60 basis points. And as we get to the desk today, futures point to a slightly lower open, down about 20 basis points after falling for a third consecutive session yesterday. Asian markets were mixed overnight. China continued to outperform. European markets are mostly weaker. Treasuries are a bit firmer across the curve. Dollar is little change versus both the yen and the euro. Gold down 10 basis points. WTI crude getting some back, up 1.1% on the morning. So question now is, will we test support? Remember, we've been identifying support in the 27.25 to 27.50 zone, 200-day moving average now at 27.50. So top end of that support zone. Resistance remains the same, 2800 to 2820. Index closed 2771 yesterday. RSI fading from overbought levels. Remember, I took the line out today, but remember what we're looking for here. We're looking for pullbacks to support where RSI holds above the 40 to 50 level. That tells us that momentum has shifted to bullish ranges and that a breakout is a higher probability outcome. If we sell off and RSI can easily become oversold, well, then that's a sign that we're not done with the consolidation just yet. And by that, I mean this bigger consolidation. For now, though, the base case is to look for support to hold in the 27.25, 27.50 area. Below that, 2700. Identify very bullish and bullish stocks in leading parts of the market. And when those stocks become oversold, those are good entry points. We will note Chaikin money flow is bullish, but declining here with the sell-off over the past 3 days. And that's bound to happen just as some of the stronger days roll off. Remember, this is a 20-day average. So as the data from 20, 21, 22 days ago rolls off, and that had to be strong data, the weaker data is replacing it here in the near term. But all in all, look for support levels to hold, and in particular, look for RSI to remain in bullish ranges. Your market in a minute. What am I writing about today? S&P 500 continues to pull back. We saw that. Small caps lead the way lower, falling 2% on the day. That's kind of interesting from a risk and a sentiment standpoint. Global stocks stall at the 200-day moving average. We'll look at the ACWI ex-US today. Breadth remains an intermediate term tailwind. Futures do point to a lower open here today. Taking a look at the power bars here. Dow 7-4 in favor of the bulls. S&P 500 still solid, 136 to 62, bulls to bears. NASDAQ seeing a little bit of pressure here. 28 bulls, 15 bears, and there's a small cap underperformance, down 1.95% on the day. 553 bulls, 322 bears. Bonds uptick, sending yields back below that 2.7% level, according to the Chaikin Power Bar. Large cap stocks and small cap stocks are bullish. Major markets are mixed. Your stock of the day today is going to be here for illustrative purposes only, maybe added to a watch list. We'll talk about why, but it's Century Aluminum. Ticker symbol CENX, from the metal fabricating industry, closed at $8.46 yesterday. So a lower price stock to begin with, down 3.2%. Very bullish power gauge rating for Century Aluminum is due to very positive export activity, attractive financial metrics, strong earnings performance. Stock does have weak technicals, and you can see that here. Very bullish stock, strong trend, strong industry group. So you say to yourself, okay, let's take a look. But when we run through analysis, it's just not there. First off, market and model not in agreement. Still an intense underperformer. Remember, these stocks are auto-generated. I'm not picking them. It's auto-generated, so I can run through the analysis with you. So this one's going to be for educational purposes, but certainly not actionable here to the long side. Would add it to a bullish watch list. Can't hurt. Stock is oversold. Money flow has been persistently negative or bearish over the course of the past 12 months, and we are in a clear downtrend. Now, it did trigger an oversold buy signal today, but I just can't get there. Remember, we don't just take one data point and say, all right, I'm going to buy it, right? Just because there's a very bullish rating doesn't mean you run out and buy the stock. Just because there's a buy signal doesn't mean you run out and buy the stock. We take a weight of the evidence approach, and the tactical indicators just are not there for Century Aluminum right now. We'll keep an eye on it, sure. And if we remain very bullish or bullish, strong trend, strong industry, and begin to outperform, then it becomes a bit of a different story. But in the here and now, Century Aluminum, not that compelling to me, especially as the market struggles at resistance. Our sector tracker now, movement of the major sectors over the last 5 days, you can see it. It's defensive at the top of the list, right? Communications. So while communications has added names like Google and Facebook, it still has a lot of the old communication services names in there. Think about the Verizons and AT&Ts of the world that are traditionally more defensive. So comms at the top of the list, definitely a defensive feel. Utilities, defensive. Real estate, defensive. Even staples, though down over the last 5 days, is a defensive group. And your cyclical names are at the bottom of the list. Industrials giving some back after a strong run. Continue to like them. But obviously, remember, a couple weeks ago, we were talking about it, and we said, could see a bit of a pullback. We're seeing it here. Healthcare, that's been one we've been concerned about for a little while now on a relative basis. And we continue to be so. Financials giving some back. Materials, tech, energy, middle of the road. Our industry in focus today, oil and gas exploration and production services, which over the past 6 months has underperformed the S&P 500 by 22%. And the power bar ratio is very weak with more bearish than bullish stocks. It's currently ranked number 21 of 21 subsectors, so bottom of the list, and you can see it here. 31 bearish or very bearish stocks for 3 bullish or very bullish stocks, and that is enough to earn it a spot at the bottom of the list. Some of the indicative names there: Occidental Petroleum, Halcon, and Anadarko Petroleum, OXY, HK, and APC respectively, all have very bearish Chaikin power gauge ratings. And let's take a look at Anadarko here today. Very bearish stock, weak trend, weak industry group. So type of name you want to avoid. If you trade to the bearish side, maybe you want to look at put options or put spreads. If you short stocks, type of name you want to be looking at. We actually had it as a bearish idea back here before this earnings sell-off. Now recouping a little bit, but let's look through the analysis. Bearish stock, underperforming the market. Dynamic duo in gear to the downside. Middle of the road on the overbought, oversold indicators. So if you're a little bit more aggressive, you can take the position here. But notice how it didn't become overbought, and now it's rolling over. That's a sign of weakness. That can tells you that this downtrend is strong. Money flow persistently bearish since the August timeframe, under a declining long-term trend line. 3 out of the past 4 earnings announcements have been disappointments to the downside. Definitely a type of name you don't want to own in the here and now. May even want to consider taking a bearish position if that's what you do. Trending names now. Yesterday's S&P 500 gainers and losers. LyondellBasell caught an upgrade, up 6% on the day. Dollar Tree's earnings sent that stock higher by 5%. We talked about Aon and Willis Towers Watson yesterday because there was commentary that Aon was buying Willis Towers Watson. Well, Aon came out and said that's not the case. So they flipped. Willis Towers Watson gives back its deal premium. Aon rallies higher after selling off on the deal announcement. Philip Morris, MO. That's Altria, actually. Catches a bid as the FDA head resigned. That could be seen as a positive around e-cigarettes. Qualcomm, some news about FDA, FTC, a lot of moving parts to their story, but stock was higher by nearly 3%. GE down 7.9% following through. We hit on Willis Towers Watson already. GT 5.3%. Didn't see any real news there. Nectar, no real news. Some collaboration announcements around with Pfizer, but I really don't think that accounts for the 5% drop. Western Digital down over 5% on some concerns about memory supply and pricing. Reporting today, after the close, Lynn and Costco, neutral and bearish, respectively. Before the open, H&R Block and Kroger, KR. Both of those stocks have neutral Chaikin power gauge ratings. Global stocks pause at the 200-day moving average. We're taking a look here at the ACWI ex-US index fund. So this is kind of a proxy for the global market outside of the United States. And what you can see is a nice steady downtrend trying to recover. Regains the 50-day moving average, which is now turning higher, but stalling at the 200-day. What's interesting to me is we've taken out these interim highs, such as what the S&P 500 is trying to do right now. RSI appears to be shifting up and into bullish ranges. I think that global stocks do look interesting. Look for a pullback here if you wanted some exposure to the global markets and you want to get it through ACWX, the ACWI ex-US index fund. Take a look at the 45-50 level, and then down below that, the rising 50-day moving average. Should those support level hold, I think that sets up a compelling entry opportunity to kind of diversify portfolios outside of the U.S. a bit. Never a bad idea. I shouldn't say never, but it's not a bad idea currently. Speaking globally, global FinTech, if you're a thematic investor, you've probably heard a lot about financial technology, FinTech for short, and some of the disruptive technologies that are coming out in that space. Well, there's an ETF to play that theme globally. The Global X FinTech Thematic ETF is ticker symbol FINX. And we can run through the analysis the same way we always do. Trading above support here at the 2650 level after breaking through the interim highs from October and November. RSI shifting into bullish ranges. Chaikin money flow solidly bullish, above a rising 200-day moving average. So I think you can take advantage of this stock as long as it's above that 2650 level for a potential run back towards the highs near $29. Again, it gives you some exposure outside of the U.S., diversifies portfolio a bit, plays on a growing theme. You're going to hear a lot more about FinTech in the years ahead. So to kind of think a little bit more thematically, this does play on that theme. Finally, it's Thursday. We look at our market breadth indicators. Market breadth remains constructive still over the net, but for the next 3 to 6 months. And here's what I mean when I say that. What we're looking at here is the percentage of S&P 500 stocks over their respective 50-day moving average. Now, you can see it decline. Last week, this was at about 92, now down to about the 84 level. I looked at data going back to 2010, and when this metric is above 80%, the S&P is higher 3 months later, 75% of the time, for a median return of 3.45%. However, the success rate is not very compelling over the following month. So in the near term, you tend to get a pullback, and we're seeing it. We talked about this a bit last week as well. So we're starting to see that in the near term. But over the intermediate term, the 3 to 6 month time horizon, it is actually a bullish indicator. Likewise, the percentage of stocks trading above their 200-day moving average is above 50. When that happens over the next 6 months, the S&P is higher 85% of the time for a median return of about 6.29%. So breadth remains constructive, as I said, if we're going to look out 3 to 6 months. However, over the near term, we could continue to see a pause and a consolidation. So that's going to wrap it up for today. Head over to ChaikinAnalytics.com/today. Sign up for that email. Follow along with this show. Daily stock ideas for free in your inbox. And if you like what you're hearing, help us spread the word. Share our link on social media. I hope that everybody has a great Thursday. I will see you back here tomorrow. Again, a special thanks to StockCharts.com. They host this show on their site every day in the 9:15 slot. And a special thank you to all of you who listen every day. I'll see you tomorrow.